Hey guys, so Netflix just had their earnings report released today, and these are some things you should know. Other than the report, I'll give you some breakdown of some of the terms that you should be aware of, such as stock buybacks and EPS, earnings per share. And I'll also talk about another way to purchase the Netflix stock if you don't want to just buy the stock itself. Hey guys, welcome to my channel. If you're new here, I'm Romel, and on this channel we talk about all things related to finance, investing, and building wealth. We discuss mindsets, strategies, techniques, and resources to help you in your journey to build wealth. If you haven't yet, please subscribe. We produce new content every week. Alright, so let's talk about this. Why has Netflix come on our radar? That's because today's recent news happened after hours, and that was that Netflix issued their earnings report after the closing of the stock market bell. So that's after 4 p.m. Eastern time. And here are some highlights that were part of the report. Netflix adds 8.5 million users in Q4, blowing away its estimates. Their revenue is up. It's actually 6.64 billion versus 6.63 billion. So that's 10 million more than it was expected to do. Earnings per share was unfortunately less than was anticipated. It was only $1.19 versus $1.36. But stick around till the end of the video because I'll be talking about earnings per share and one of the things that Netflix is doing that might increase this EPS metric. Also, it says here that the global paid subscriber additions was 8.51 million versus the 6.03 million that was expected. So that's, almost a 2.5 million user addition to what they were expecting. That's a huge number. That's a lot of subscribers. That's a lot of monthly fees and subscriptions that they got. Like I said, it says that the company added 37 million paid memberships in 2020 and achieved $25 billion in annual revenue, which is an increase of 24% year over year. That's obviously a big number, and 24% is a big percentage. So that's one of the reasons why a lot of people are very bullish or very optimistic on this stock. Having more revenue, having more customers, and doing better, showing better performance than the past year is always a great indicator. Okay, apart from that, I took some of the highlights from the key articles. This is just one article. That the one I talked about recently was a Yahoo Finance article, but there was a recent Reuters article that has other key metrics. So it says here, and I'm not going to go through all of it, but it says that they no longer need to raise external financing, so that's always good. They are willing to explore returning cash to shareholders through ongoing stock buybacks. So that's a key thing. Again, I'll mention what buybacks are and how it affects their earnings per share in the later part of this video. For FY21, they are now targeting 20% operating margin, which is good. The free cash flow, and we'll talk about what free cash flow is. The free cash flow for quarter was negative 284 million versus negative 1.7 billion in Q4 of 2019. So that's a big improvement. That's almost $1 billion, more than $1 billion that they were able to reduce in negative free cash flow. Okay, and the other thing is that productions are back up and running in most regions. So that's a good sign. That means they're able to produce new content. And we'll talk about some of the metrics relating to the type of content they're producing and how often they're producing content as well. And the thing that actually got most investors excited about Netflix was the after hours increase in the share price. So if you look at this chart, you'll see here that at 4 p.m. it was trading at around $501, and after hours, after the report came out, you'll see that the stock shot up to $565. So that's a huge increase. And that's why a lot of people are getting excited about the stock, because the news is positive and also the share price is increasing, which is all good signs for investors. All right, now let's talk about what free cash flow is, or as you see in some of the articles, FCF. That's its abbreviation. Well, free cash flow is basically the cash that's available for the company to repay creditors or pay dividends and interest to investors. One thing to note is that free cash flow is actually a metric that shows the profitability of a company that excludes the non-cash expenses of income statements and includes spending on equipment and assets as well as changes in working capital. So free cash flow is a good thing. It's a metric of profitability. And obviously, the more free cash flow you have, the better your company is, or the better its metrics are looking. All right, now let's talk about how Netflix is doing as a company in terms of the content they're creating. Well, according to an article I saw here, and this was in July 2020, I haven't been able to find exact numbers of how much content they've been producing, but according to this article, it says that they have 113 brand new shows that have been coming out in 2020. If you guys do know of another link that shows how much actual content or new content they've been producing or have been adding to their platform in 2020, please let me know. I'd like to see. I do know that every time I turn on Netflix, there is a new show, there is some new content, there's a new movie that's been uploaded. So I just know that they're producing a lot of new content, and a lot of them are actually Netflix originals, which is great. Another thing you should know about is that at the bottom of the Yahoo Finance article, they say that Netflix has a whole lot of competition, and that's not new news. They have Amazon Prime Video, they have Hulu, and now Disney Plus. They're actually releasing a new movie every week, which is amazing. So they'll at least have 52 new movies at the end of this year. So in terms of how the company's doing, the article said that production is back on track. So they are shooting, they're back into shooting and, creating new content. And they're also trying to commit to releasing a new movie every week. So that's a good sign. They're not being stagnant. They're not just recycling content. They're not just adding old movies into the platform. So one of the things I mentioned before was stock buybacks. Let's talk about what that is and whether or not that's good for stocks, whether or not it's good for the Netflix stock price. Stock buybacks are basically when companies ask their shareholders to buy stocks from them. It's literally what it is. So it's the company buying shares back from shareholders. That does two things. One is that it only happens if the company has money to buy back shares, and two is that it decreases the number of shares outstanding. One thing to note is that buybacks can help increase the value of stock options. So it's a good thing. And it says here that a buyback will generally increase share prices. So in general, stock buybacks can be a good thing. Like I mentioned, it'll increase the share prices, which all investors eventually, want to do. They want to increase their share price. Another thing I found that was interesting about stock buybacks is that because they're decreasing the number of outstanding shares, it actually increases the EPS. So that's another metric that I mentioned before. Their EPS was around $1.19, where it was projected to be $1.36. Now that Netflix is saying they want to buy back shares, I'd be interested to see how this affects their EPS. This thing says that if a company buys back shares, then it reduces the outstanding shares, which in turn increases EPS. But EPS, earnings per share, what is that, and should you even care? Well, EPS is basically the company's profits divided by the outstanding shares of its common stock. Literally just what I mentioned. And it's important because the resulting number, or the number that you get, the EPS, serves as an indicator of the company's profitability. So a higher EPS means a higher profitability. One thing to note about EPS is that in general, when you're comparing EPSs, you should be comparing EPSs of companies in the same sector. You shouldn't try to compare EPSs in different sectors. For example, you wouldn't want to compare an industrial sector EPS to a technology sector EPS. Those aren't comparing apples to apples. All right, so now the question on everyone's mind, should you buy Netflix? Well, before I give you my take on this, just remember, I'm not a financial advisor. Anything that I'm telling you is literally just research that I've done, and it's my conclusion based on the analysis that I've provided in this video. Well, my take is that Netflix has shown increased revenue, it's shown increased customer base, it's shown increased potential in telling us how much content they're going to be producing, and their share price has been increasing. Those are all good indicators to buy a company. Apart from that, If you're a long-term investor, then Netflix definitely seems like it's going to be a staple in the streaming service space. However, not all investors are looking to buy individual stocks. That being said, one of the ETFs that I've looked at is the Microsectors FANG Plus, ticker symbol FNGS. And the reason that I'm bringing this to your attention is that it has a very high holdings in Netflix stock. It actually has 10% of its holdings in Netflix. So if you're looking for a way to invest in Netflix and reduce your exposure by using an ETF instead of an individual stock, then ticker symbol FNGS is one of them that you'll want to look at. All right, guys, let me know what you guys think. I tried to give you more information than just the news. I tried to break down some of the key topics that are related to this news, such as stock buybacks, whether those are good things or bad things, earnings per share, whether that's a good thing or bad thing. And I tried to give you an example of how you can invest in Netflix without actually buying Netflix itself. Remember, as an investor, you want to understand how you are as investor, what your investing strategy is. Are you more risk adverse? Are you less risk adverse? Do you like to buy ETFs that have a group of companies, or are you looking to just buy an individual company because you know that by having one company, your chances of profitability are much greater? On the flip side, your chances of volatility and the chances of the stock price decreasing is also just as much. So ultimately, it's up to you. Netflix does seem like they are doing all the right things and are crushing all the right metrics to be a great long-term investment. All right, guys, hopefully you got some great information out of this video. If you did, please smash the like button to let the YouTube algorithm know that you appreciate the content we produce. Also, if you know someone that would benefit from seeing this video that isn't really sure about Netflix and why their stock price has shot up, or if they don't know what stock buybacks are or what EPS is, then feel free to share this link with them. I make these videos because I try to be a little bit more informative than just reporting the news. So thank you all for those that have been with me since the beginning. For my new subscribers, thank you so much. I really appreciate your support. If you haven't yet, please subscribe. Like I mentioned, we produce new content every week. We're a new and growing channel, and we're really trying to produce content that is both informative but also educational. So I do want to teach you some of the terms that I think are relevant. All right, guys, thanks for watching. If you'd like to connect with me on other social media platforms, such as Facebook, Instagram, or Twitter, I'll leave links in the description down below. All right, guys, I'll see you on the next one. Thanks for watching.